Rents are rising, and that goes for most major cities. These are unstoppable, and it's all because of unnatural events. Government intervention at its finest. A recipe for disaster and its true consequences. You came here for the truth. Today we're going to look at rental prices and what's keeping them so high. Let's look at this. From the Fed's own website, you can see that the rent of the primary residence has been rising year after year. I'm happy to show you from the beginning of the financial crisis, but you can see this as a trend. What this doesn't show you is that not only is it rental prices, we are seeing energy prices rise, we're seeing food prices rise, and when you add that all together, you start to get a different picture than what the government portrays. Then, when we take this information, realize we're looking at national levels here, but you don't live in the nation as a whole, you live in a city. Those major cities where most people are living have higher rental prices in terms of their increases. You're seeing that as a result of government intervention. I'll get into that more in a moment, but I just wanted to show you that what you can do as an individual, if you want to really look at the statistics properly, is to not base them on a national level such as this. While it does show that it is increasing, which is true, you can see the more dramatic rise. Instead of spreading it out over a nation, you take it for what it is and take it at the city level, not even at the state or province level. You want the city level, and then you can compare that to other cities. So let's do that right now. This article here that I found, I read through, it's showing you, first of all, the median rent in major US cities, and then it compares that, which is interesting, to the amount of coffee shops in these areas to see if that somehow correlates. And it's a little fun way to do things here. But essentially what we have is the median rental price in the previous 6 months. You're looking at New York on the top of the list, then San Fran, Los Angeles, and so on. And let's see how that correlates to coffee shops. Again, New York and San Francisco on the top of the list. Los Angeles is there as well, and others. So it's an interesting little thing, but I'll get into this more and why this is important. We're looking at the median rent in Manhattan neighborhoods. So when you break it down by the actual neighborhoods within Manhattan, you start to get a different picture than when you look at it on a state level or even on a city level. The more you break it down, the better it gets. And you'll see that the more expensive areas, in fact, have more coffee shops. It's an interesting little tidbit of information, but I wanted to show you the fact that these prices in these particular areas can be dramatically higher than they are in different areas of Manhattan. We're talking about a small area geographically that Manhattan is, but the price can be very, very different. So that's something to think about as well. Now, the major point that I wanted to make for today. Fannie Mae and Freddie Mac are two friends from the financial crisis, from the housing boom and bust, are financing this rental boom. The GSEs, government-sponsored entities, made 53% of all apartment loans in 2016. And they're suggesting that this is down from their combined 68% market share in 2012. So look at this. So their conservator, the Federal Housing Finance Agency, FHFA, recently eased the GSE's lending caps so that they can crank out even more loans. And that's what's happening within the financial industry. They may have decided to tighten up on regulations a little bit after the financial crisis to pretend that they were doing something good, but ultimately they reversed course and they are allowing this to happen again. Reserves are at very low rates and banks are simply lending out more and more money. They're doing so and they're being promoted to do so as well. Fannie Mae and Freddie Mac are particularly dominant in garden apartments and student housing, around 60%. The two remain the largest in mid-high-rise lenders, but hold only 35% of the market. And I just wanted to just note this one thing here. Government-sponsored entities, which, by the way, were the problem back in the housing boom and bust, guarantee commercial mortgages on apartment buildings and package them into commercial mortgage-backed securities. So taxpayers are on the hook, banks are on the hook too. And that's what this is all about. You and I, we pay for this. You may not feel it directly, but we do. When you can take the worst of the worst debt and you can package it up into a so-called investment, people will buy it, investors will buy it, and they will be able to make a profit from it. You know, even Apple owns some of this crap. But don't worry, because they have a lot of your money. People are just investing in these companies and they buy this crap, and then you wonder why we're bailing them out. It's not to necessarily bail out the individuals that are involved here. It's to support the corporations, which are bigger than the governments. That's what it comes down to. And then we look at this. Rental apartments and buildings, 50 plus units to be delivered in 2017. New York City, again, on the top of the list. But other cities here obviously being very important, from Texas and other places. LA, again, on the top there. And I'm suggesting to everyone that perhaps we need more places for people to live. That is a fact. However, what if the government wasn't there to loan out money to people? What if the government wasn't there to be the lender of last resort, to be that safety net, to do everything for everybody, wipe the behind of every person? Well, then you would have a very different scenario. I know I'm talking about what ifs, but that is usually what happens when the cracks appear. We get these what if scenarios to actually come up. And then you take it one step further to the black swan type event, which nobody is anticipating. Well, then we have a very different picture. And then just quickly, just wanted to mention this for all of my friends here in Canada. Check out a website called rentalhousingindex.ca. This here is an excellent website to show you the basics, what you can do to see all the details, the fine details of what's happening within the prices. And it gives you all the way down. You can drill down as far as you want, and it tells you a lot of detail. That is rentalhousingindex.ca. I want to switch gears here, just two articles I wanted to get to very quickly. Your favorite Mayor de Blasio now wants to tax wealthy New Yorkers to pay for everything from emergency rail repairs to low-cost bus and train rides for the poor. That's right, the wealthy have to pay for the poor. That's what it's suggesting. And they want to increase these taxation, increase taxation on people and have that pay for something else. This socialist type environment doesn't work ever. When you talk about the wealthy, you're generally talking about people who are making, depending on how they term that, $100,000 or more a year, maybe $250,000 more a year, usually $250,000 per household. And these people are definitely more wealthy than the average person. That's a fact. However, these are the people that generally tend to employ other people. They tend to buy more expensive vehicles. They tend to go to restaurants more often. They tend to spend more money into the economy as a whole. But if you start taxing them at a higher rate, they're either going to take their money, they're going to pull offshore, they're going to different tax havens, they're going to pull their money out of the system into a different way, finding different loopholes, and it is a big mistake. Don't tax them at a high rate. Don't tax wealthy people. Don't tax the middle class. Don't tax anybody. Taxes are the worst way to bring in money. Well, just on their income, which I believe is immoral. I believe it is theft. It's complete theft to do so. It's extortion. Pay us the money or we send the creditors after you. It's putting a gun to your head. Taxation is theft. That's a fact. I'm actually making a t-shirt of that right now. And when you see what they always try to propose to people, we'll just increase tax. And the middle class will say, well, I'm not part of the wealthy, so that's okay. You can do so. I'll vote for you. The lower class will do the same. That's just the way it is. And then just wanted to note this. If you ever check out, it's a really good website, visualcapitalist.com. A lot of people are visual learners, and I believe that this is something, even if you're not, it's just something to look at. That's a really great resource, and that is Visual Capitalist. Is US or China the world's economic superpower? And then it says, depending on who you ask. So these countries here on the right-hand side in the red are suggesting that these are the world's leading economic power. And you're looking at Russia, Germany, Sweden, even Canada, the UK, and Australia and others are suggesting that China is in fact the world's leading economic power. Whereas if you ask Korea, Japan, Israel, Turkey, and so on, they say that the US is. And it gets into the different issues, geopolitical issues down below. I'm not going to get into the whole thing. I think it would be interesting for you. I wanted to bring it to you. That's at visualcapitalist.com if you want to see the direct link. As always, under sources, if you look in the description of this video, under sources, there's a link. If you click that link, it brings you to the sources I've used in that particular video. So check that out. And last but not least, if you found the video informative, please give me a thumbs up, and you can flip through my books at Amazon. They have a look inside feature. You can actually flip through the pages. The first book is about the 4 asset classes and how to profit from it, whereas my new book is about reducing your monthly expenses, becoming self-sufficient, solar panels, and this type of thing. That's at Amazon. Links are in the description below. Take care.